Accountantese, common financial terms translated to English. Welcome back, everyone. It's CPA Dan Hodges with myfavoritecpa.com. Today, we are going to tackle a topic that often leaves people scratching their heads. That financial jargon is what some people refer to as accountantese. Whether you're a seasoned entrepreneur or whether you're just starting to dip your toes in the water in the world of finance and business, understanding these terms is pretty critical to having clear conversations. So grab a pen and paper because we're about to demystify some of them. And these are financial terms that you will hear throughout your journey of being self-employed or a business owner. Let's start with one of the most fundamental concepts, and that is the concept of assets and liabilities. Assets are things that you own. It's things like cash, investments, and property. Liabilities, on the other hand, are debts or obligations that you owe, often related to some of the stuff that you own. It would be things like loans or mortgages. Now, let's talk about equity or net worth, and that would be the difference between your assets that you own and your liabilities that you owe. Your equity or your net worth reflects the health of your business. The smaller the number, the more you're struggling. The bigger the number, the healthier your company. Next up, let's talk about revenue and expenses. Revenue is the income generated from sales or services, while expenses are the costs required to operate your business. The goal in business is to have revenue exceed the expenses, or in other words, a profit. Moving on, let's talk about cash flow. This term refers to the movement of cash in and out of your business over a specific time period. Positive cash flow means that you have more coming in than going out, while negative cash flow can indicate the opposite. Now let's talk about profit and loss. Profit is the amount earned after subtracting all your expenses from your revenue, while loss occurs when your expenses exceed your revenue. Understanding your profit and loss is essential for evaluating the financial health of your business. Lastly, let's touch on one that's very confusing, and that is the term depreciation. This term refers to the systematic allocation of expense of an asset expected to span a length of time in your business. So depreciation does not mean that something is going down in value. What it means is you are deducting the cost of that asset over a time period, often defined by IRS. Just one little example would be, real estate. A commercial building, according to IRS, should be deducted over a term of 39 years. And there you have it, folks. That's a crash course in accounting terminology. Remember, mastering these concepts can empower yourself in business, helping you to make informed decisions about your finances and to have a clear communication with accountants, bankers, and other financial professionals. Thanks for tuning in, and if you have any comments, drop them down below. I'd love to engage in some conversation with you on this subject or any subject that you're interested in the world of accounting and taxes. By the way, if you yourself are getting into business, or if you're maybe struggling even though you've been around the block a few times, head over to my website, myfavoritecpa.com. And that way you can get a taste of my cloud-based education, which could make all the difference in your happiness.